Two things drive the world forward: invention and innovation. They have a powerful grip on the economy and on our imaginations. And there is no end to the success stories coming out of the Silicon Valley. In all these stories, the entrepreneur is the hero. But what we explore less is the hero's mentor, the one that guides them through the chaos, the venture capitalists. Hi there, welcome to the Startup Incubator Series. I'm your host, Cédric Bollag, and every Wednesday, we're going to learn the ins and outs of startups, everything from the ideation and conception stages all the way to funding, distribution, and success. Today, we look at venture capital, how they work, and how you can get the right one for you. VCs are essentially the muscle behind the innovation because they support new and emerging companies with funding, contacts, and opportunities. They might invest in a startup from the early stages, stay with them throughout, and even stick around till the IPO stage. Now, the VC process involves several parties. You have the founders who want funding, of course. Then you have limited partners who are private investors willing to invest in higher risk startups to diversify their investment portfolio. Then you have the VC firms themselves, and they provide resources, capital, and investment opportunities to limited partners. And finally, you have the investment bankers, who are the deal makers. They look for companies to sell via mergers and acquisitions, or they aid in taking a company to the IPO stage. And the VC firm connects all these parties together. They take time to vet the founder, the idea, and the deal to make sure everyone is dealt a good hand. And while venture capital compete to get the best deals, they also support each other by investing together. So you will see several VCs participating in each round of investment, with one firm being the lead investor and others being secondary. This also enhances the credibility of your startup business and spreads the word. Now, there are many kinds of VCs out there, and just because they have money doesn't make them the right fit. Some VCs invest purely in food tech, some only in health tech, and some are more diverse. But even the most diverse ones will have certain limits, like geography, the stage your startup is in, and so on. You want somebody who is completely aligned with your plan and interests, which is why you have to do your research. Depending on your startup stage, you might need more money. You may need guidance and contacts. Check out the companies they have invested in the past and see how they are doing today. Once you have a list, send out warm introductions talking about you and your company in a short summary. I personally try to avoid cold emails, but if you don't have mutual connections to the specific VCs you like, it's not always a bad idea. This was basically a short crash course on VCs, but if you have any more questions, feel free to leave them down below and we might make a video on it in the future. The Startup Incubator Series is all about giving aspiring founders all the information they need to start on their own journey. So hit that subscribe button for more videos like this and ring the bell to get notified every time we upload. Thank you so much for watching and see you in the next one.